What is up, traders? Hope y'all are doing well out there. Another one from the Darkside team here, and this one we want to go over GJ. Now, this is actual price action from today, October 26th. This is live right now, as you can see, it's retracing. But this again was all posted in our Telegram. This trade going one for 25 or 26. Again, guys, let's just point out the entry. As I've said to you many times before, there's no secrets to getting in tight. What do we wait for? We wait for that descending structure, break of structure, retest into our imbalance or order block or whatever you'd like to call it, this zone down here, and boom, price takes off. This is the example I've shown you guys countless times where price runs into here, just like this, and takes off. If you look, guys, it's the exact same thing as we've spoke about day in and day out. It's all over our Telegram. Down, break of structure, back into the imbalance, and gone. All right, and as you can see, this trade right now, like I said, let's zoom out a little bit. As you can see, price never looked back. It was gone. But more importantly, guys, one thing that I want to point out on this actual trade is the fact that the manipulation, doesn't really discriminate whether you're retail, whether you're smart money, and we've been picking on smart money a little bit, not to be negative, but just to bring light to some things. Again, if smart money works for you, great. If retail works for you, great. But let's point out GJ's play today and exactly what took place here, because it was pretty. It was pretty, and you should have been able to take advantage of it. Now, first and foremost, the one idea they presented first to me was going to be the head and shoulders pattern that a lot of people trade. And it's not your fault if you trade a head and shoulders pattern. That's what you were taught in your retail classes. And that's, sometimes it works, I guess. Sometimes it doesn't. I don't know. That's up to you guys. But let's just point out and see how the composite operator used that to his advantage today. So you'll see here, clearly this would be, for the people who aren't maybe familiar with this would be the left shoulder. This would be your head. And this would be your right shoulder from the head and shoulders pattern. Now, what you want to do when you're trading this pattern is you want to wait for the break of what they call the neckline. The neckline is the resistance, support area, whatever they're calling it these days, I don't know. But they're waiting for price to break through this area here. They wait for the right shoulder, then it breaks here, it retests this area, and continues to the downside. So head and shoulder traders were in. Let's see what price did exactly here. Okay, they've got their rejection, so their sell positions were put in from around this area here. And if you're a head and shoulders trader, there's nothing wrong with this, but you got stopped out today. Again, there's nothing wrong with it. This is what you were taught, but this is what actually happened. So you can see you were tapped in. You've got your 1 hour, you got your signs of weaknesses and your bearish candles coming in right at your resistance zone, making it a high probability trade for you guys. And we can see you've got some decent price action that came in. You probably thought you were doing well for a while, but just like it happens to everybody else, you get tapped in and then you get tapped out, and then price goes your way anyway. And you can see that's exactly what happened here. Price flew out, and this is live price action. So now that you're tapped out of the market, or even if your stop was above this high, like they teach you, this little high right here, they still look at that wick. You think that was on accident, guys? You think that wasn't intentional? Do you really think that the composite operators or whoever it is that's behind all this stuff doesn't know that the retail trader stops are right at this high? Look at how precise that is. Look at the wick, how it comes and takes everybody out. It's not by mistake, guys. And I mean, this would have still been, look at it, it's a 95 pip stop loss, which is absolutely terrible. But if you were choosing to trade that way, they still would have came and got you. And then look what price is doing. It looks to be heading in your intended direction, which is the most frustrating thing ever. So, I mean, that's just the one example right there for the head and shoulders traders. Now, let's see who else they got. Since we're on the support and resistance example right here, we might as well go for that. So let's see how they took care of support and resistance, guys. We'll get rid of our head and shoulders just so we can avoid confusion with that. Okay. And here we have it. It's very simple, guys. Just look at this without even having to adjust any of the candles or move anything forward. Just look at what happens. Price breaks down, big push to the downside. So if you're a support and resistance, now remember, this area would be a solid support and resistance because, as you can see, this area provided support, bounces, price breaks through, bounces again, confirming this is a support area, and then it breaks through it. now this would turn into resistance. A lot of people call this a break and retest, and they wait for this exact signal here. Look at this 1 hour candle, guys. You've got your indecision candles, which they call them, the ones with the wicks, the dojis, and whatever they're calling them. That you've got all that. Then you've got this big, beautiful bearish engulfing. That's what's going to get the candlestick traders in as well. They've got their bearish engulfing. They've got their break and retest of the resistance. Again, it was support here, support turned resistance. They got short, and by now, you guys know what would happen. They would wait for the bearish engulfing. It's the same thing, guys, depending on if they want a 90 pip stop. It doesn't matter. It's the same thing that happens. They put you in profit for a little while, and things look good, and then they immediately spike you out. And like I always tell you, look at the way the spikes happen. They're never by chance. They are 100% precision missiles to come and take your stops. I mean, they don't even give you a chance. Just look at the candles. Again, look at how this price action was so hesitant. You see? And then look at how fast it shoots to the upside. Boom, it takes everybody out. And then look at that little wick that goes right above this high. I mean, it's crazy, guys, but again, that's what's happening. So there's our support and resistance, guys, taken out. Boom. Let's look at another example. Let's back it up even further. Let's go back to our same point when all the manipulation started. We have our trend line traders. Again, if you're a trend line trader, there's absolutely nothing wrong with that. You just need to know when trend lines are going to work and when they're not going to work, okay? Because they will work against you if you don't know that. All right, so here would be our trend line. All right, obviously we would start here, come right through it here. It looks solid, price comes into it, and then price selfishly acknowledges the trend line, which is just wrong. You can see it right here where price actually acknowledges the trend line to the pip. Again, guys, it's not by chance. It costs millions of dollars to move the market 1 pip. When the price touches that precisely on a trend line, it's intentional. These are never by chance. These are all intentional moves. Okay, so let's just keep it going. And again, most trend line traders would use their support and resistance here. And we run back into the same situation. We run into a perfect sell scenario where our trend line traders, let's extend that a little bit just to make it clean for everybody to understand. See, extend that out a little bit. There we go. So you can see the break of the trend line here. You can see the acknowledgement of the trend line. And it all just happens to happen right in this little sweet spot where they know traders are watching. They know about the support and resistance. They know about the trend line. So what do? They make it all happen right in that little sweet spot. And you know what else is probably there, guys? Let's just take a look. It's probably a Fibonacci level as well. A high probability Fibonacci zone that everybody will trade. So we'll grab our frame, we'll put it from the high point to the low point. And there you go. You've got acknowledgement nearly to the pip of the 50. So boom, the 50, that's it. Fibonacci guys are in. The bearish engulfing sellers were in off the next candle. There you go. They're all in. The support and resistance guys are in. The head and shoulders guys are in. All liquidity's built. And what does price do? It just runs and runs and runs. And you can see even to this point, they were still attracting sellers as well because they're still acknowledging this trend line. And again, I'll point it out to you. Again, it does not happen by chance. You can see they are still acknowledging, and there's probably, let me see what else we got here. What other levels? Maybe the OTE. Okay, we've got the OTE level, which is what ICT likes to use. And again, nothing against OTE. I use OTE. You just got to know when to use it. And ICT is great. All that's fine, But if you were using the OTE fib level, you would have been targeted here as well. Because, again, you can see OTE with trend line acknowledgement at the same time, which is bringing sellers into the market. And you see what it happens, guys. It just runs right through it. Even structural traders were trapped on this one. And you can see that right here. Let's just throw out some structure. You got your high, low, lower high, lower low. So if you were trading structure or imbalances or order blocks, I'm sure you can find one inside here on the lower time frame. Not even going to bother looking because I don't trade that way. But even if you were trading this right here, you would have still been wicked out right here. You would have still been wicked out. I mean, you can see it, guys. It's clear as day. Let's clean it up. If you were a structural trader, you got your high, low, lower high, lower low. And if you were anticipating another lower low from this, you can see that they would have taken you out right there again. You see, so even right now, the manipulation is still on. Now, our play, if you notice in the beginning of the video, our play was from down in here. We were way down in here. We caught this entire leg to the upside. So now that price reaches into this zone, which is the zone we have marked out, now I can hedge it. I can sell it for free because I've just made 25, I think it was 26% return in a matter of hours on this push right here. So now I could easily risk 1% on this hedge. If it falls, it falls. If it continues to the upside, I'm still long anyway. If it melts through, then we're short, and we're just as good. So you see, guys, it's not about when these things play out, as far as retail, smart money, um, supply and demand, support and resistance, Fibonacci, all that. It's about knowing how to use them and knowing when to use them and how to use them properly, and that's what we do here on the dark side. We challenge our guys to think differently, and to understand what the point is of these setups, because there's a very real head and shoulders right here. This did not happen by mistake. This is all intentional. There's a very clear neckline right here. I mean, you can see it. The acknowledgement, guys, is nothing to be argued about. When this happens, it's not by chance. This is all this acknowledgement, this precision here, all of this, these taps here are setting up for the taps here, which make you have the idea that this is a support area. And just like the acknowledgement here, this makes you think it's a resistance area. So when you were taught this stuff in your boot camps, in your classes, and your YouTube videos, you're not wrong for anticipating a sell from this area because that's what you were taught. And there's nobody to blame, but that's just how the market works. Now, if people want to say the market is not evolving and it's not adapting and it's not targeting smart money more, and so we're not here to argue with you. If that's what you believe, then that's perfectly fine. If smart money is going to be the holy grail, then let it be. Same for retail, whatever it is. All we know is that we're going to keep doing what we're doing over here because it works for us. If what you're doing works for you, then you probably shouldn't even be watching this YouTube video because you already know what you're doing. You should be counting your money or doing whatever it is that makes you happy. But if it's not working and you're frustrated, that's where we come in. Give us a shout. We've got our free Telegram channel that we mention over and over. All these trades are posted there from all different sessions. We've got our website. We've got the YouTube videos that we keep posting, trying to make some awareness to what's going on, guys. So again, I hope you found this helpful. It's not your fault if you're trading retail. This is what you were taught. Unfortunately, it's not working out the way you would like it most of the time, but hey, I guess that's trading, and if you're good with that, you keep doing what you're doing. And if you're frustrated, looking for something else, like I said, give us a shout on the dark side. We are still taking a couple more students in for the November boot camp, and we'll talk to you soon. Thanks, guys.